U.S. stocks, they're wavering this Wednesday afternoon here at the New York Stock Exchange as the markets struggle to recover from yesterday being the worst day of the trading year 2023. Traders are also bracing for the Federal Reserve's latest meeting minutes this afternoon and more insight on the central bank's future hiking agenda. Meanwhile, in the forex market, the euro-dollar sees the upside prevail. The British pound-U.S. dollar pair sees the bias remain bullish, while the dollar-yen sees consolidation. The U.S. dollar-Canadian dollar pair sees a bullish bias above 132. The pair is on the upside above the horizontal support at 132 and above its 20 and 50 period moving averages. Long positions above 132 are favored with targets at 137 and 139.80 in extension. The Bitcoin dollar sees the upside prevail as long as 22,630 is the support. 22,630 is also the pivot point. And gold expects 1775. Gold is on the downside below the horizontal resistance at 1890 and below its 20 and 50 period moving averages, which have validated a bearish cross. Short positions below 1890 are favored with targets at 1810 and 1775 in extension. And silver sees its key resistance 2275 a troy ounce. Don't forget to follow Trading Central on Twitter and other social media networks for all of your forex market updates. And for Trading Central Web TV on this Wednesday afternoon, coming at you live from the New York Stock Exchange, I'm James Sweeney. While silver sees its key resistance 2275 a troy ounce. Read through. U.S. stocks rising modestly early this Wednesday following a broad-based sell-off to start the short week as investors await a readout of the Fed's latest meeting minutes due out this afternoon. Minutes from the FOMC, the Federal Open Market Committee's meeting from January 31st to February 1st, will offer insight into the thinking behind the official's 25 basis point interest rate hike earlier in the month. Wall Street banks have revised their expectations for upcoming rate hikes by the Fed. Teams at Goldman Sachs and Bank of America saying last week they estimate 3 more rate increases this year. The moves follow a steep sell-off on Tuesday that saw the S&P 500 nosedive 2% below 4,000. The Dow wiping out 700 points and the Nasdaq plunging 2.5%. The moves coming as investors adjust their expectations to higher interest rates for a longer period of time. And lastly, some advice. Vocabulary. Can never master it. And well, sometimes you learn a new thing or two. You'll find out why very, very soon. 5, 4, 3, 2, 1, Wednesday. Ladies and gentlemen, it's me, James Sweeney, coming at you this Wednesday morning from the balcony above the floor of the New York Stock Exchange. And yes, it doesn't feel like it, but we're halfway through the week. Only the second day of the abbreviated trading week here on Wall Street, and I'm ready to see whether or not the bears are going to continue to run amok on Wall Street, or will the bulls finally come back? Because yesterday the markets did get hammered. Are we going to see a bit of a rebound today? Are the markets going to feel as positive as I do right now? Let's take a look to see how the markets are shaping up to start off the second trading session of the week here in the Big Apple. 5, 4, 3, 2, 1. We do that outro with silver. Then stretch this out. 5, 4, 3, 2, 1. Done. Thank you, guys. Stretch my feet. Stretch my feet. That hurt, man. Stretch my feet.